All right, hey everybody. So we're going to be going over a little strategy from our auction market theory to be able to find option plays. Right now, I know everything has been kind of more geared towards futures. I am going to make a video for that as well. I know I have touched on that before, but I just wanted to also show you guys how that you can make money with options with this same strategy. Okay. So this was a call that I gave the other day on Costco. I seen somebody else also, very successful trader, way more successful than me. I picked up a lot of knowledge and a lot of game from him as well. Had this call out in his group, which it ran a crazy amount. Okay, so how I'm going to start, because typically what you will see with these kind of things are the pre-market data. I've already had this level right here marked out. So this is where the open actually happened at on this day, January the 8th, on Thursday. Right. So I'm just going to rewind it back just so you guys can already see. Now, keep in mind, this is the level where it opened up at right here. Okay. So what I saw in the morning time, right, which I already had this trade marked out, because I seen the absorption on the daily time frame. So I was curious whether we were going to attempt to go back down here to possibly touch this fair value gap, and then push back up, since we have these absorption levels right here where it broke out from previously. But when I seen absorption on the daily here, when the pre-market opened up, okay, price was already up here, right, where the level was marked out at, where you seen the bottom of the candle to open up, because this is the daily time frame, right? That's why you see 1 day right here in the corner right here. Okay, so as the pre-market, it usually show like a orangish label, just like the one that's here, kind of hovering over here, letting you know that's where the pre-market is opening at, or the area is at, right? So by Wednesday's candle closing bearish and closed down here at this level, by us seeing the price is already up here, this is what's called a bullish kicking pattern. Okay, so when I noticed the bullish kicking pattern up here, and it's called a bullish kicking pattern because it closed bearish, so it's kind of forcing the people to be out of their positions because they're already at so much of a significant loss. Okay, if it closed down here at 882, 883 ish, and price is already hovering up here at 901, these people are significantly down on their positions because they were pushing that price was still going to continue in the downwards trend. Right, by gapping up and opening up here, that changed the whole entire scenario. Okay, so I'm going to replay and just have this daily candle up now. So as we seen, right, this is some of your pre-market data. Okay, and in fact, what I'll do is let's go back to our daily right quick. Let's drop a line down here for that candle's high, and we're just going to change that to white. All right, so that way we got a good clean visual of it. All right, so oops, sorry about that. So this level down here, 893, that was the high of the previous day's candle, which we've seen in our pre-market data that at 8:30 it was already pushed up over there. We have all these fair value gaps down here that were created. This was as soon as the day opened up the next day, 4:15 p.m. Actually 4:15 p.m. Wednesday, right? It shot up and pulled back, and then it started pushing back up as the market opened up on the new day, 4 a.m., 5:30 a.m. Tap back down and start pushing up. We start getting our displacement candles, right? Price displacing to push upwards. So when the market opened up the following day, right, what did the price do? It wicked down a little bit towards this area, towards the high, into this bullish fair value gap right here. It pushed back up, right? So if we go into replay mode, right, what we'll see on this candle, by using everything that we have from our auction market theory tools, you will see that our CVD was confirmed bullish. Price was in acceptance. and the delta was at 58,730, right? So our CVD for our all-in-one CVD, right? Price was already above previous day's levels. Plus, we had a bullish kicking pattern, and once we seen it already above the London session highs, right, and it dipped down into them and rejected and pushed back up. That was a key entry. Now, even if you didn't want to necessarily want to take it as soon as it opened, once you've seen it dip down and push back up, that could have been your entry, probably around about this 905 level with high acceptance. Okay, now as we move forward through this, right, go one candle at a time. We had our bullish fair value gap. Now, what you will see as the chart is actually moving in these case scenarios, you'll see that this would have turned slightly bearish, and your delta might have been like negative 500, negative 600, negative 1,000 at that time when it pulled back into these fair value gaps. Okay, when you see it pull back into a fair value gap, and then you start to see it move away from that fair value gap, right? And you start to see delta increasing tremendously, right? This might have been negative 500, might have been negative 1,000, negative 1,500 at the time when it pulled down into the fair value gap. Then it started to push away. As it started to push away, you'll see that negative turn from negative 1,500 to negative 1,000 to negative 750 to negative 500 to negative 10 to positive 500 to positive 1,000 to positive 2,000, 3,000, right? Enter the trade as it's exploding towards that new direction, because we have our CVD. Whenever our CVD is positive, right, net positive, that means that we should be bullish. Okay, so we want to see a net positive by confirming that the candles are green, and then also that our delta is aligning with that, right? The CVD gives you acceptance, the delta gives you permission to enter. Okay, so as the delta is steadily increasing, right, because I said it possibly went from negative 15, negative 2,500, and it started moving upwards, that was our permission to enter the trade. Okay, and as we keep going on, all right, same thing, it pulled into that fair value gap, and we might have even been able to catch a pause. Let's see. I'm gonna attempt to see if I can catch that slight pause and see where it was at. All right, see if we can be able to catch it. You'll see it was 0, and then it kind of jumped when I did that replay right there. But it went probably just a tad bit negative, and then it started back pushing positive. Right. Every time a new candle's open up, it's going to start at 0. If it's a fair value gap and pulls in there, it's going to go a little bit negative, and then it's going to shoot back positive, right? So taking a strat play, which is where you see your 3 bars, your 1 bars, your 2 bars. 2 bars are continuations, 1 bars are inside bars, 3 bars it took out the high and the low of the previous candle, as this one did, right? So as you see your CVD steady growing and the candles are staying green, or your CVD candles, or the bars are staying green, and you constantly see the CVD number rising, and you also see the delta rising, especially when you see displacement and we create these fair value gaps, right? When this bar opened up here, you would have seen it go negative, 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 but the CVD stayed positive, and then it started increasing back, positive, 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 more positive, more positive, more positive, negative a little bit, start push back, and then it started going positive, positive, positive on the delta. Okay, those are the pullbacks when you see these fair value gaps get created, and you see it turn a little bit negative, and then it start back increasing positive. Then as it gets stronger and stronger, that gives you the permission to enter the trades. All right, so let's just kind of let it play out. And we see then it hit the New York session high. It came back down again. We got absorbed trying to go lower, try to push back up, and it got absorbed going higher. So absorption basically is just orders that are coming in, right? Passive orders or limit orders that are resting to keep things going up. But at some point in time, opposition is going to come in and then start to try to push price back down. and you start to get these zones, right? Absorption zones where price got absorbed lower, and then price also got absorbed going higher. Okay, so when you see these start to appear like this, right? These are zones that you kind of want to stay out of until price breaks out, either upwards out of the absorption zone or downwards out of the absorption zone. You want to wait until it gets out of there to give you better confirmation. Now, by us already being in this trade, once it broke out and took off, you can kind of see where it kind of leads to here, and from there we'll just let it play out, and we see that it did kind of break upwards and it got absorbed again up top. So that's just kind of letting us know that they're not trying to push price higher. Price is not getting accepted higher. As you see, price starts to come back down, hits off the lower absorption level here, pushes back up, gets caught in this, breaks out. We start to get acceptance to the downside. And also what you will notice is that as we got these absorption zones here, right, it broke up, got wicked out, absorbed here, try to push it up again, absorbed, accepted, hit right here off of this previous absorption level, push back up, absorbed, push back down, absorbed, push back up, absorbed, got accepted, right? The acceptance strong, right? It got accepted because it broke out of the zone, right? So when it breaks out of the zone, it starts to get accepted, right? What we also take note of, or we need to take note of, that when price got accepted, the CVD switched. Even though these bars were red, right, the CVD was still net positive, right? Once it starts to flip, right, the downwards trend, right, then now we're starting to get net negative. So we got net negative with acceptance, right? And then now we start to get our continuations, right? So I know it's kind of hard to see, like right here, that we see our acceptance, but what also that is highlighting by changing the bars from red to blue pointing down is that now we are in a sequence, right? And that's what the blue means, right? Acceptance red, the sequence turns blue going down. It's a different color blue as it's going up. I'll just rewind it so then that way you can see also in your CVD dashboard that we have bearish delta, that we are now net negative 12,555. The CVD is net negative 1,686, right? Because now we are pushing downwards, right? So the dashboard helps you align and understand what's going on, right? So now that we see that bearish flow is in, and we drag our cursor down here, we see it's at 16,967. I don't have it exactly where, but if you look upwards, you'll see that it's around about 16,000 here, ish or so, and same thing up here. 1600. Sorry about that. 1600.86. Drag it down here. We'll see that we're somewhere around about that same area, right? You know what I'm saying? It's not going to get exact, but those are the things that you are looking for. Okay. So now that we see that the CVD has had a flip from positive to negative with acceptance outside of absorption zone, right? And this next candle, after we got out of our zone, it kind of wigged back up into that fair value gap that would have been created by this low of this candle, high of this candle, pull back into there. So once we seen that pull back up, we should have seen this switch from, like, it may have been like net negative 10,000 to net negative 8,000, and then start to push back going 10, 11, and you're going to see price continue to push down, letting you know that everything is in agreement, right? So now we see the 1686, 12,555. Let our next candle go, and it pulled back up into this fair value gap. We see at 2,000, the CVD is steadily increasing, and let it go a little bit more, and we see it steadily increasing. Then now, what do we have down here? Now we got a rejection, absorption, a failed 2, right? Which the failed 2s, and what I mean by failed 2, you will see the 2 where it's red at the bottom. The arrow is pointing red, but the bar started to push up because it was trying to continue downwards first, and then it got rejected and absorbed, and it started to push back up. I like to see these, but we still always have to wait for confirmation, right, in order to trade those. Okay, so we let it play out, and we see that it got absorbed going up. Got caught another absorption zone once again, all right, and this was our aftermarket hours, so I'll just stop that right there. And we see that it found trouble in this area once it got absorbed, right? Absorb going down, absorb going up, and then it started finding trouble trying to escape out of that zone, right? So once you see these things, right, it's being aware of what's going on in those zones. So now I'm going to leave out of here, right? And we'll go because it was a continuation the following day. So remember when we first started this video, it was from our absorption, right? We seen our bullish kicking pattern because price closed down here. It started up here in the morning. Like I said, you would have seen your pre-market numbers floating up here when price closed down here. Okay, so now once again, right, we move to our open because our open was up here on Friday. All right, so we would have seen the same thing. It kind of hovering up here again, which that's exactly what I saw for the pre-market levels. And when I seen this again, right, then I kind of knew, okay, well, if I'm seeing that again, it's possible that it's going to be a continuation because we have our gap up. Now, these things can change, right? But just you have to be mindful of what you're seeing visually. So let's go to our 15-minute time frame. And what do we see here once we go back to the market as the market opens up? All right, let's go to our 9:30 candle. So our 9:30 candle, price pushed back down, wicked into this fair value gap, pushed back up. Our CVD was net negative. This candle opened up, which is our 9:45 candle after we had this 3-bar. Okay, and we tried to push down. Price got absorbed. It pushed up. Okay, it still didn't really get higher than our London session highs, so we still going to kind of wait to look for a confirmed breakout. Okay, this candle, our next candle opened up, right, got absorbed, trying to push back down. So this allows us to know that, hey, they are protecting this zone right here. Okay, price tried to push down initially when the market opened up, got rejected. Now we see absorption pushing up. This candle opened up, it came back down, it tested this absorption level to see, hey, our buyer's really serious about holding this level, right? And then it got pushed back up. So 2 absorptions. CVD is net positive. And what do we get once we open up on our 10-15 candle? We get this high broken right here. So let's go into our replay mode, and on this candle you would have seen, right, even though this candle did close red, okay, our CVD was still bullish, right? Our delta was still strongly bullish. Okay, so by us seeing that they are trying to protect these zones, then now we are aware that, okay, they're trying to keep this price up, right? We still need to wait for confirmation that that is what they're going to continue doing. So our next candle, it opens up. Now we have our intent, as you would have seen price push up. The delta 23,494 in our box, pushing price away. Okay, pushing price away. And we also got our acceptance strong, right? Also highlighted here where we see our CVD is steady climbing, right? Even this bar was even red. We see that the CVD is still getting higher as price is rising, and that's what we want to see. Price rise, CVD rise. Okay, so this was our continuation all the way from our trade from, what was that? We started monitoring on Wednesday. Thursday gave us that first push up. Friday gave us a continuation play, and these were both positions that I called out. We did get our pull back into this fair value gap, and then we got absorbed up here and came back down to the fair value gap, and we would have seen it going negative. And I'll rewind it back so you guys can see. All right, Our CBD was negative 9,383. Our delta was negative 9,383. Still bullish 27.29, right? Until we start getting a flip or anything of our CBD, we want to just kind of just be, waiting to see a rejection come or a confirmation. All right. So this one, same thing. The delta was weakening. Right, it went from 9,000 to 76, and our CBD was still net bullish. All right, come out of there, and now we see our CBD confirm and push prices back higher than it was on the previous one. We see our bullish intent, right, 2022, and we continue out, and now price tried to push back down towards the fair value gap after it already came out of it, right? What did we get? We got absorbed, right? Our bullish intent is still strong, so we let it play out, and prices continue up higher after they break out of this zone, right? So when you see absorption come from up top, pushes back into the fair value gap, gets absorbed, trying to push prices lower. Buyers are refusing to let these prices go lower. We look for our intent, which is rising CBD, rising delta, break these zones and continue upwards. We got absorbed up here again, and price broke that zone one more time until it hit this wall, absorbed, acceptance weak, right? CBD starting to drop and fall. Pulls back into the New York Sessions high, and the low of this candle, it broke with weak acceptance, tried to get back into this zone, rejected again. We see our net negative delta, right? CBD lowering 1,096, and we let it play out some more. We see we got absorbed again, right? Buyers trying to take back control and push it back up, and we let it play out. Absorbed again, more absorption. All this stuff right here is after hours, right? So I got caught up in these levels, right? Absorption from absorption, wick down here, same type of style of absorption, push back up, absorbed again. So then now that's when we get our just pretty much our sideways trading. Okay, I'm going to move on to show you guys a couple of different tickers. Let's see, how long have we been on there? We've been on this one for a second, right? Let's get over to Gap, all right, which was another good trade that happened. Okay, so Gap on the daily, we had pretty much kind of the same thing. I'm not going to break everything down as in detail as I did before on the Costco play, but we'll just rewind it back here, and same thing, absorption, bullish kicking pattern, price kicked everything out, and so now we have our open around about there. Let's change this to orange, and go to our 15-minute time frame, and Gap, we pretty much kind of see the same thing. All right, we had all these fair value gaps that got created. Price opened up on a 930 candle, wicked down a little bit, and then it just took off running. Okay, same pretty much type of setup with those bullish kicking patterns. Those do lead to a lot of times very, very successful trades. And it's just monitoring everything like I showed you guys before with the CBD, the delta steadily increasing, and the CBD being on your side in alignment to continue to make higher highs. Okay. I will show you another ticker right quick. Let's go over to DIA. Which is the Dow Jones. But you can also trade in the options world as well. So here we had absorption going down. So now let's just leave out right quick. So then that way we can see. Now I'm going to show you this, right? Because we had absorption here and price pushed up, broke this high, continued up. Same kind of thing. It opened up here with that kind of, this wasn't a kicking pattern, right? This was just a continuation, right? Absorption and price pushing up. Okay. So here we place our there. We go down to the 15-minute time frame. This wasn't one of the best setups or trades, but it still panned out. It opened up 9:30. It did shoot up. It got absorbed here. We got our fail 2 absorption. We also had our absorption here off this session low, as it created new session lows from this candle to this candle, which let you know that these guys were really defending this level hard. So as price pulled back up, closed on this 15-minute candle at 10 o'clock, it wicked back down one more time, okay, to try to test that area, right, which they were not playing around with defending that area. This trade, it would have gave you, you know what I'm saying, a lot of fluctuations in your P&L going up and down, which you see that they were defending this area very strongly. It couldn't break through here. All right, we have our CBD, which was positive 5,400, delta 72, 868. Our next candle opened up, it got defended, rejected again, absorbed again. Like when you see these are not the best moves that you want to be in, because it's just getting absorbed back and forth. They're trying to figure out where they agree upon price. Okay, there's our fail 2. There's our acceptance, got pushed up, wicked out again, absorbed, tried to push back down into this zone, absorbed again, and then that way you will start to see that prices continue higher with acceptance, and they're getting absorbed, trying to go down, push back up, accepted, back down here into these zones. So when you see a lot of absorption happen and stuff like that, that means you're going to be in a lot of chop until you see them escape these zones. And as you see, whenever you see them escape these zones, that's when you get into acceptance, right? Escape this zone, gets into acceptance, right? Absorption try to go down, push back up. So those are things you kind of really want to pay attention to. I'm just going to go back a little bit back here and show you, like when you see that gap up in between price and it's already above that candle, right? Those are going to be your trades that you're going to see that most likely are probably going to be better trades, and not so much absorption on your lower time frame, which you will be using that to enter. Okay, so right, as soon as the day opened up, right, it just took off. 9:30 candle took straight off. Okay, let's do a little brief rewind on this, because you could have been finished so early with this trade, right? You see that you had support from the London session as price started to move up at 9 a.m., right? We already had made it above our London session highs, okay? So as it already made it above our London session highs, we did catch a little bearish candle pull back right here. As soon as this candle opened up, it went back here to actually test that level from the London session highs, and it took straight off. And you see that CVD, the delta level is at 226,120, right? And our CVD levels was at 20,969. All right, even if you would have got into this trade and it was steadily increasing, even if you didn't get in here into 485.50, all right, you still had this thing run $3 more, right, to 488.74, right? You still could have caught $3 as you seen the CBD rising, the delta rising after it had a small wick and then price started took off. That could have ended your day right there, depending on how many contracts that you had. After that, then we see that it gets up, we get absorption, acceptance, hit the New York session high, came back down, pushed back up, absorption, escaped that zone briefly, came back, absorbed, escaped the zone again, and then price just started getting absorbed. All this stuff right here, if you were already in this trade back here, you could have just, let it run a little bit and see how everything panned out. But once you got up here and it started getting absorption and broke through and stuff like that, then you see it was just all chopped back and forth, absorption. They wasn't willing to agree to let this thing to continue to keep running. It got absorbed one more time. Price came down, accepting strong, and it started kind of turning bearish. Your CVD levels were steadily decreasing, was letting you know that bulls were not really stepping in hard to keep pushing this price higher. You see it start to decline, flip. Not a lot of money made here though. Okay. So that is how you can use this to be able to analyze trades from the prior day, looking for absorption, looking for those gap ups, looking for those bullish kicking patterns, and then a bearish kicking pattern would just be the same thing in reverse as I broke down with the bullish kicking pattern. Okay. I hope you guys enjoyed this video on how to find your setups on options as well. Always look for the absorption or either the strong continuations like I showed you on the Costco play after it continued the following day. Look for your absorption for support to continue going in that direction if you are trading a continuation. Preferably, like I said, I would like you guys to look for your absorption plays or your daily time frame and look for it to continue in the opposite direction. Okay, not really so much opening up inside the candle like this one did, but it was still a way that you could have traded this as well. I'll just to show you guys before I end this video. I know it's been kind of a little bit of time, but I'll still just give you guys a quick breakdown. Got absorbed on the daily here. Price opened back up inside this candle. So what you'll notice is on a day like this that when it opened up, right, acceptance was weak. It rejected up here for the London session high. Price started to push back down on the 915 candle. Your CVD was already net negative. Okay. You got acceptance strong on the 930 open. If you didn't want to take that, you could have waited until this one opened up. You see you already have a sequence on your 930, a sequence on your 945 candle, and you could have just took this and rolled this all the way down, right, and made money going down, right? So those are the different ways, like I said, that you can use this strategy on options as well. I hope you guys enjoyed this video. Any questions, you can leave them in the comment section. I'll try to get back to them as soon as I see them. Okay. All right. Thank you guys. Have a good day.